journey awaits.
Today, I would like to provide an overview of the Sri Lankan tourism industry and its taxation landscape. In Sri Lanka, tourism plays a vital role in the economy, being the third largest foreign exchange earner. Despite challenges like COVID-19 pandemic, the industry is set for a recovery in 2023. The country's diverse attractions from rainforests to cultural sites make it a captivating destination. As a global travel resumes, Sri Lanka is ready to offer visitors a sustainable experience and showcasing its natural beauty and historical richness.
Thank you, Dhanjay. I would like to talk to you about the significant role that tourism plays in the Sri Lankan economy. The graph shows how tourist arrivals and earnings from tourism have fluctuated over the past 5 years from 2018 to 2022. In 2018, there were over 2.5 million tourist arrivals and tourism earnings were over $4.3 billion. Tourist arrivals continued to grow in 2019, reaching over 2.3 million. However, earnings from tourism dipped slightly to $3.8 billion. The year 2022 saw a sharp decline in both tourist arrivals and earnings from tourism due to the COVID-19 pandemic. There were only around 500,000 tourist arrivals and earnings from tourism dropped to just over $500 million. Sri Lanka's tourism industry began to recover in 2021 with tourist arrivals reaching over 700,000 and earning from tourism rising to over $1 million. This recovery continued in 2022 with tourist arrivals surpassing 1 million and earning from tourism reaching nearly $2 billion. As economic benefits of tourism is a major source of revenue for Sri Lanka, as you can see from the graph. Earnings from tourism have consistently between over $1 million since 2018. This revenue helps to fund the government's budget and social programs. Tourism also creates a significant number of jobs in Sri Lanka, according to Sri Lanka Tourism Development Authority. The industry generates hundreds of thousands of jobs, both directly and indirectly. These jobs are in a variety of sectors, including hotels, restaurants, transportation, and retail. Tourism can also help to develop previously neglected areas when tourists visit a new area. They bring with them money that can be used to improve infrastructure such as roads, bridges, and schools. These investments can help to attract new business and create jobs in these areas. One of the major benefits of tourism is that it attracts foreign investment. This investment is used to build new hotels, resorts, and their other tourism infrastructure. This investment creates jobs and helps to boost the economy. My part is over. Next to Dhanjay. Thank you.
Regarding taxation in the tourism industry, businesses are subject to both direct and indirect taxes. Direct taxes include 24% income tax rate for tourism businesses, with possible incentives for qualifying entities. Non-resident service providers might face 40% withholding tax on their income. Indirect taxes like value-added tax across different tourism-related activities such as hotels, air ticket sales, adventure parks, and safari services. Additionally, the Social Security Contribution Levy requires employers and employees in the tourism sector to contribute percentages of their wages, and stamp duty and other indirect taxes may also apply during transaction within the tourism industry. Thank you. Over to you.
Thank you, Dhananjay. So I'm going to explain you about the tax concessions and reliefs. So the government of Sri Lanka through the Board of Investment provides various tax concessions and reliefs for BOI approved businesses and projects in the tourism sector. So these incentives are designed for boost investment and aid the post-COVID recovery of the tourism industry, which is targeted to achieve significant revenue and visitor numbers. So here there are some tax concessions. First one is for tax holidays. Significant tax holidays are granted for qualifying tourism projects aimed at encouraging investment in areas like luxury hotels, wellness tourism, medical tourism, and theme parks. So these holidays can vary in duration depending on the scale and impact of the projects. Next one is duty exemptions. Import duty exemptions may be offered for materials and equipment necessary for the construction and operation of tourism facilities, which helps reduce the overall cost of development. Next one is training and development incentives. There might be incentives aimed at training and skills development to ensure that the local workforce can meet the demand for new and growing tourism projects. So these may include tax credits or deduction related to training expenses. Last one is custom tax incentives for eco-friendly projects. So if the public-private partnerships project incorporate environmentally sustainable practices, additional tax incentives might be available. So these incentives are part of Sri Lanka's broader goal to promote sustainable tourism development. When it comes to the next slide, here there are impacts of tax concessions and reliefs under the government. So here there are positive impacts and negative impacts. So when it comes to the positive impacts, tax concessions reduce the operation cost of the tourism sector and boost investments and create new job opportunities in the tourism sector. And talk about the negative impacts, loss of revenue for the government and ineffectiveness may arise due to the tax concessions and distortion of competition. So these are the impact of the tax concessions and reliefs under the government. So my part is over. Next over to you, Binuri.
Earlier, my friends have discussed about tourism industry in Sri Lanka, related tax and also concession reliefs and also impact to the government. Now I'd like to talk about tax ambiguities, particularly context of the tourism industry in Sri Lanka using a recent court case as an example. Tax ambiguity is when the tax laws aren't clear, leading to different interpretations and confusions. In Sri Lanka, unclear legislations and lack of specific guidance often contribute to these ambiguities. So, as you can see in the slide, Hotel Yabo Paradise Private Limited versus Commissioner General of Inland Revenue is the one of case related to the tax ambiguities in Sri Lanka. Hotel Yabo Paradise, a company engaged in the hotel and tourist industry in Sri Lanka, that matter is in the interpretation of tax laws, especially related to value-added tax and depreciation allowances under the Inland Revenue Act. The company filed VAT returns for a specific period, which are contested by an assessor, leading to an assessment and subsequent appeals. The core questions raised include whether the disposal of a building constitute a taxable supply under the VAT Act, the ownership of building, and the eligibility for depreciation allowances. We have find out some There are some key points of ambiguity in this case. First one is depreciation allowances. There's uncertainty about whether the hotel could claim depreciation on a disposed building and how it is affect tax liabilities. Second one is VAT treatment. It's unclear if the disposal qualifies as a taxable supply under VAT Act and if the VAT was accounted for correctly. Third one is interpretation of tax laws. Different interpretations of tax laws, especially regarding asset disposal and transaction, add to the confusion. Lastly, we have find out ownership and tax liabilities. There's also uncertainty about ownership and tax liabilities. Determining ownership and its impact on tax liabilities, especially in asset disposal cases, makes things more complex. The court examined ownership, construction, and VAT liability laws. Ultimately, they ruled that the hotel didn't qualify as the building's owner for the tax purposes and that the disposal was not subject to the VAT. So, we believe that clarity in the tax laws and guidelines is essential for fair and transparent tax system. So, this is the end of our tax analysis in tourism sector, and next part of our presentation will carry on, my friends.
Thank you, Binuri. Today we are going to discuss Sri Lanka government tax revenue. There are two main types of taxes. First, we have direct taxes, which are levied directly on income or wealth, including income tax, corporate tax, and property tax. These taxes are crucial as they target individuals and businesses based on their earnings and assets. On the other hand, we have indirect taxes which are imposed on goods and services and are often paid by consumers. Examples include VAT, excise duties and import duties. Let's move on to the next slide. However, there is a traditional reliance on indirect taxes in Sri Lanka which can pose challenges. This reliance means that the burden of taxation falls more heavily on low-income earners and there is less emphasis on direct taxes. It is important to evaluate our tax structure to ensure fairness and sustainability. By rebalancing our tax policies to incorporate a greater emphasis on direct taxes, we can create a more equitable system that supports economic growth and social development. Our goal is to reform the tax system by relying more on direct taxes and broadening the tax base. This will reduce reliance on a small number of taxpayers.
Tax changes in Sri Lanka from 2016 to 2024. In 2016, VAT rate was increased from 11% to 15%, as well as under Japan government in 2016, they reduced general VAT liability threshold 3.5 million to 3 million, and VAT liability threshold for wholesaler and retailer they reduced from 100 million to 12.5 million. In 2017, Japan government introduced Inter Revenue Act number 24 of 2017. When it's come to 2018, they introduced the Revenue Administration Management Information System, as well as they introduced Tourism VAT Refund System. In 2019, under Saubhagya Dekma, they abolished nation building tax. In 2020, under income tax, they changed the personal relief for resident, non-resident, and non-resident but citizen for Sri Lanka to 3 million. When it's come to 2021, they increased VAT rate for financial services up to 18. Earlier it was 50%. In 2022 and in 2023, they changed personal relief for resident, non-resident but citizen for Sri Lankan, rupees 1.2 million. And finally, in 2024, the VAT rate applicable for goods and services increased from 15% to 18%. So that are the changes happened in the last 8 years. Now, moving on, let's see effectiveness of the recent proposed new tax changes to overcome the economic crisis in Sri Lanka. First change is VAT rate increasement. From 2016 to 2024, the VAT rate was increased from 11% to 18%. However, the increasement of VAT rate can generate additional government revenue, which can be used to fund essential services and reduce budget deficit. Next point is threshold reduction. Lowering VAT liability threshold for business in the wholesale and retail sector could broaden the tax base and increase revenue collection. The next point is abolishment of nation building trust in 2019 under Japan government. Under Slovakia Dekman, abolishing the nation building tax in 2019 may have simplified the tax system and reduced the tax burden on businesses. This could potentially stimulate investment and economic growth. Next point is income tax changes. Adjustment to personal relief and income tax rates can influence disposable income and consumer spending. Lowering personal relief in 2023 may have increased tax revenue, but could have also reduced consumer purchasing power. Final point is electronic filing in 2021. Requiring electronic filing of tax return can improve efficiency and accuracy in tax administration, reducing complaint cost for business and potentially increase revenue throughout the better monitoring and enforcement. So this is how the recently proposed tax changes are effectively evaluated to overcome the economic crisis in Sri Lanka.
Thank you, Pavitra. In conclusion, the Sri Lankan tourism industry is very important for our Sri Lankan economy. Clear analysis of tax laws is needed for better concessions. Tax revenue is crucial, especially with significant tax policy changes since 2016. Evaluating recent tax changes is essential to address economic challenges and boost revenue generation during this economic crisis. This is the end of our presentation. Thank you.